Your credit score matters. Your chances of obtaining credit at the best rates increase with your credit rating. It may affect your ability to obtain a variety of goods, including credit cards, loans, mortgages, mobile phone contracts, and more. In search of advice on raising your credit score? Try to stick to the guidelines below. Recommendations for raising credit scores. 1. Show your address. You can enroll in the electoral roll at your current location even if you live with your parents or in a shared apartment. 2. Maintain a modest credit utilization rate. The amount of your credit limit that you have used is known as your credit utilization. Your credit utilization is 50%, for instance, if your limit is £2,000 and you have spent £1,000 of it. A lesser proportion is typically viewed favorably by lenders, which raises your credit score as a result. Try to limit your credit usage below 30%, if at all possible. 2. Create a credit history. Because it may be challenging for businesses to evaluate you if you have little to no credit history, your credit score could be affected. Young people and newcomers to the country frequently struggle with this issue. Fortunately, there are several actions you might be able to do in order to improve your credit history. 3. Make consistent payments on time. You can demonstrate to lenders that you're a trustworthy borrower and are capable of managing credit responsibly by making on-time and complete payments on your accounts each month. Although it's important to check up on the potential effects of unused credit cards, old, well-managed accounts will typically increase your score. 5. See if you can immediately improve your score. You can demonstrate to us how effectively you manage your finances by safely tying your current account to your Experian account. We'll search for instances of your prudent financial behavior, such as paying your bills on time and contributing to savings or investment accounts for Netflix, Spotify, and council tax. When you search for credit or submit a credit application, we'll send a summary of your enhanced data to partner lenders. See if you might rapidly raise your credit score by learning more about Experian Boost. 6. Check for mistakes and note any on your report. A lender could deny you credit if they find even a little error, like a typographical error in your address, has a negative impact on your credit score. To ensure that all of the data on your credit report is correct and current, it is worthwhile to examine it. If you do find a mistake, get in touch with the provider right once and request a correction. If you require our assistance, we can take up your cause with them. You can ask us to add a notice of correction to your credit report to clarify any bad information that is true but occurred under unusual circumstances, such being hospitalized for a while or losing your job. 7. Keep an eye out for fraudulent activities in your credit file. Fraudsters could obtain credit in your name without your knowledge if they have access to your personal information. The expert fraud support staff at Experian can help if you notice something incorrect on your credit report, like an application you don't recognize. Find out what to do if you've fallen victim to identity theft. 8. Get a credit builder card if you can. A credit builder card might aid in repairing your credit score if you're trying to raise it. Usually, they have high interest rates and tight spending restrictions. Your credit score can temporarily suffer when you first apply for a credit card. But if properly applied, it can eventually aid in raising your score. If you only use credit builder cards occasionally each month, they may be useful on everyday essentials you are going to buy anyway. In order to prevent incurring interest, make sure you always make complete and on-time card payments. What are the advantages to you of having better credit? You have a better chance of getting credit if you have a higher credit score, since businesses will consider you to be a lower risk. This is because a high score shows that you've managed your credit responsibly in the past, such as by paying any required repayments on time. The advantages of raising your score could include: 1. Increased likelihood of getting a loan, mortgage, or credit card. A higher credit score increases your chances of being approved for any loan, credit card, or mortgage you may be applying for. Additionally, you can have access to a wider range of credit offers from different companies, which can help you save money. 2. Reduced interest rates. Lenders may offer you better interest rates on loans and credit cards if they believe you pose a reduced risk, which can lower the cost of borrowing. For instance, having a high credit score can increase your chances of getting approved for a 0% spending card or a low-interest loan. 3. Lower prices for auto insurance. Your credit score may have an impact on the interest rates you pay over the course of a year if you decide to pay for insurance over time. 4. Increased credit limits. Your chances of borrowing more money should increase as your credit score rises. Goals like purchasing a new automobile or making house upgrades could be accomplished more quickly as a result. There are several factors that can affect your credit score, but you should be aware that it won't improve immediately. It may take at least this long to see genuine gains in your credit score because it might take several weeks for information about items like your new bank account or credit card to appear on your credit report. Prior to new accounts raising your credit score, you might need to wait for them to mature a little, for instance, for a few months. As you establish a credit history, paying your bills on time and consistently will raise your score. Your credit report will be updated every 6 years to include missed payments, defaults, and court judgments. The effect of any missing payments or defaults will, however, probably lessen over time. They will entirely disappear from your report after 6 years. 4 suggestions for maintaining a good credit rating. 1. Limit credit application numbers. When you submit several credit requests in a short period of time, lenders may conclude that you are overly dependent on credit and hence a higher risk. Regardless of the type of credit you want or the amount you want to borrow, each application will result in a hard search being made of your report that businesses can view. Try to spread out any credit applications. A decent rule of thumb is no more than 1 per 3 months, but keep in mind that different lenders may have different requirements. 2. Steer clear of defaulted accounts. Defaulted accounts typically happen when your connection with the business has soured, typically as a result of you skipping multiple planned payments. Your credit score may be significantly impacted by accounts that have defaulted. 3. Only take out loans that you can afford. Debt problems can result in county court judgments, CCJ, individual voluntary agreements, EVA, and even bankruptcy. These items will remain on your credit record for a minimum of 6 years and will significantly lower your credit score. 4. Watch out for crooks. Your credit score may be protected if you keep a careful check on your credit report and look out for any indications of fraud. If you see an increase in the amount you owe or any applications you didn't submit, you may be a victim of fraud. Subscribe to this channel for more educative videos like this.